Welcome to the Mint, ZTN Premier Business Show. In fact, Zimbabwe's Premier Business Show. Great show we have for you today. We're looking at what's happening in the fuel market. Are there fuel malpractices? Why is fuel not getting to you and me? We also look at Facebook. I'm sure you did not know that Wednesday, Facebook pictures went out on Facebook, WhatsApp, and Instagram. We're going to explain why and what the danger is about Facebook having your information. And, of course, our main story. We're looking at the Zimbabwe Investment and Development Agency. The bill is currently in Parliament. We interviewed some of the members of the One Stop Shop Services Centre, and they're going to tell us what the progress is and where we are to make Zimbabwe open for business. Don't go away. The Mint will be right back. As usual, we talk about what's happening in our local market, the Zimbabwe Stock Exchange. Now, retreat back to pre-SI 142 levels. If you look, for example, at the shares that retreated, Lafarge was down 0.17 cents to close at 1.20. InScore was also down 0.15 cents to close at $2.32. Cassava was also down, as was Econet and Padenga. Cassava, Econet, Padenga have been perennial losers in the last couple of days. However, of course, their underlying value still remains the same. There's still a stock that in the Mint we would recommend you look at as a buy. I think there's no doubt Padenga, Econet, Cassava are buys, as of course my perennial favorite, tourism stocks. Looking at top gainers, Old Mutual clawed back some of the losses it had on Wednesday. Delta, same thing. It also clawed back some losses, only marginally, 0.06 cents, closing at 3.4063. And Seedco also gained a touch. Mashonaland Holdings, after its fantastic profit forecast, I believe it was over 700%, if I'm not mistaken, they also closed a little bit higher. So the market really is treading water. They're trying to analyze what SI 142 is doing to market prices, to do to the exchange rate. And now, of course, with the exchange rate in the banks pretty much above the street rate, that's obviously good news, not just for us Zimbabweans, but also for business to see policy consistency. Now then, looking at South Africa, I always ask myself, where did South African multi-billionaires or millionaires make their money? Well, you'll be surprised that 30% of South Africa's dollar millionaires made their fortunes in financial and professional services. That's according to a report by Afroasia Bank and New World Wealth. These services include banking sector, law firms, accounting firms, fund managers, and wealth managers. In fact, the report, which was released on Wednesday, showed that South Africa had 39,200 people with assets of more than $1 million US. 2,070 with assets of $10 million, and 94 people with assets of $94 million. The report found, I'll just quickly give you some of the highlights of the report, found where people made their money in South Africa. Well, 30% was in financial and professional services, 16% was in real estate, 9% was in tech and telecoms, and 8% was in mining, farming, and chemicals. The report says that there are 4,400 fewer dollar millionaires in South Africa as compared to 2018, and 130 fewer people with assets more than $10 million. In total, the private wealth held by people living in South Africa declined by 10% to 722 billion to 649 billion. But here's the interesting number. The average South African individual, the report said, had total assets of $11,500 each, which is about 163,000 rand, which is the second highest in Africa behind Mauritius. So there you can see that the middle class is gaining assets. However, the dollar millionaires are falling. Maybe that's a sign that the middle and upper classes are coming closer together. I wouldn't mind having $100 million, but hey, it's not my life. Anyway, now then, there is a special day yesterday, and unfortunately we couldn't mention it, but we're going to mention it today. Yesterday, Rwanda Rwanda actually celebrated its 25th Liberation Day. And this is a critical day, not just for Africa and Zimbabwe, for the whole world to remember. It is a day that they commemorate the overthrow in 1994 of the genocidal regime that massacred almost 1 million people. Our hearts, of course, will always be with Rwanda and what happened back in 1994. And, of course, Rwanda are Zimbabwe's fair-weather friends, and so we wish them happy Liberation Day. Also, of course, yesterday was the 4th of July, and for those of you out in the world, you also know what that is. That, of course, was Independence Day for the United States of America. They all call it Happy 4th of July. So I don't know how, I wouldn't sing, of course, but I would have to say Stevie Wonder's song, brilliant, Happy Birthday to You. And that's both to Rwanda and the US. So we hope that they had a great holiday. Unfortunately, of course, that meant that US markets were closed yesterday, the 4th of July. However, just a little bit of data for you. Shares of Facebook, Amazon, and Netflix and Alphabet all rose at the end of the session on Wednesday. 100% chance the Fed will lower rates by at least 25 basis points in the July meeting. In fact, analysts believe there is a 100% chance that is going to happen. The central bank last month opened the door to easier monetary policy by stating it will act as appropriate to maintain the economic expansion. Now then, 2 nominations. President Donald Trump has nominated 2 members for the Fed Reserve Board. There were vacancies on the board. He nominated Christopher Waller and Judy Shelton to the board. The problem with that, of course, is that these appointments may then define the way the Fed's monetary policy moves forward in the future. Because just like the Supreme Court in America, if you nominate a certain type of banker or at least a certain type of board member to the Federal Reserve Bank and also the Supreme Court, for example, you are chewing the court and the Federal Reserve Bank to actually believe what you want to believe. So in President Trump's case, he believes the Federal Reserve Bank is not doing enough to help stimulate the economy further. Investors are now focusing on today's U.S. non-farm payrolls for June. Economists expect it to have risen by 160,000 in June compared to 75,000 in May. So there's still some good numbers coming out of America. However, the Federal Reserve, as far as analysts are concerned, will cut interest rates by 25 basis points in their July meeting. Now, European stocks remain subdued, of course, with the American markets closed. Weaker than expected economic data came out yesterday as well. That gave investors cause to anticipate that the Federal Reserve Bank again will cut interest rates. I'm going to keep saying that because it's critical. The Fed will cut rates. And Italy was lucky. They averted the European Union disciplinary action over its public finances. You know that there are some Euro countries, particularly Italy and Greece, that do have financial problems. And as you know, the EU has strict guidelines on how much they should be spent on budget deficits. It's about 2% at the moment. And both Italy, Greece and Portugal, for example, have broken that cap, and they're obviously spending a lot more money. And the European Union actually took them to court or took them to a disciplinary hearing, and Italy escaped that, thank goodness. Now, in corporate news, Walmart-owned British supermarket chain Asda signaled that the possible stock market listing could take place in the next 2 to 3 years. That obviously bolstered the stock. I think people are looking at Asda, which is one of the largest retail shops in the UK. Obviously, a listing would be very attractive to investors. Now, Deutsche Bank itself is going through some major issues. In fact, recently they had held major merger talks with Commerzbank to try and make one of the largest financial institutions in Europe. Well, they're looking at a major overhaul. They're looking at spending 5 billion euros overhaul in the coming days. They will see the axe fall heavily on its investment banking division. Deutsche Bank is moving out of investment banking, and Deutsche Bank shares traded 0.4% higher during the afternoon session. Investors saw this as a good move to turn Deutsche Bank into profitability. Italian bank stocks climbed yesterday. In Europe, UniCredit and UBI Banca climbed 4.3% following the respite where the EU disciplinary hearing did not call Italy to task over its public finances. Coca-Cola HBC stocks tumbled 6.8%. European blue chip index, they traded ex-dividend on track for their worst day in nearly 5 months. Now in Asia-Pacific, stocks in Asia-Pacific were mixed on Thursday as worse than expected U.S. economic data raised expectations. Again, remember the linkage between stock markets. Obviously, Federal Reserve Bank anticipated cut in July, affects all markets, and it should technically also affect our local market as well. Asian markets are not spared from the expectations of a Federal Reserve rate cut in July. Nikkei was softer at 0.3% higher. at 21,702.45. South Korea, the KOPSI went up 0.61%. Of course, as people look, this is actually current trading, so it opened this morning. You can see Nikkei is up 0.2%. Hong Kong, Shanghai index 0.02%. IXX, the Australian index, is up 0.5%, and Shanghai Composite 0.25% up. KOPSI, Korean KOPSI, up marginally 0.05%, and CNBC 100 down very marginally. I think we're going to see, after the U.S. markets were closed yesterday, we're going to see at least, I think, a day of treading water in Asia, in Asian stocks. So that will be exactly what we'll be looking for later. However, of course, the U.S. trade-China dispute still rages and still holds markets' attention. With the White House economic advisor Larry Kudlow, he said Wednesday that soon face-to-face negotiations with China will begin. That's good news. Of course, investors are waiting for developments in that meeting. They want to know the direction of world trade. Any agreement between the U.S. and China will smooth world trade between the two nations and, of course, help economics around the entire globe. Now then, let's have a quick look at African currencies. Of course, the only comment I can make on currencies is currently the interbank market rate appears to be higher than the street market rate, which is great news for our economy and for prices. Now then, looking at commodities, I want to look at the steel industry because the largest steel mill in China and pretty much the world has put the market on notice. The top steel mill in China, Boesteel, has issued a 1-2 warning about the outlook, saying it sees the twin risks of slowing demand and rising output in the country that accounts for half of global production of steel. Their shares, of course, sank on that news. However, they're saying that contraction in industries, including property and autos, will slow consumption this year, although infrastructure remains relatively robust. Boshan Iron and Steel Company said in a statement as it reported profit for 2018. Exports are set to drop amid global trade friction, while supply may expand, said the listed company. The reason why I'm mentioning this story, of course, is that one major mineral that we have, of course, is iron ore out in the Cisco area there. And the trick is, of course, is that if we are aware of what's happening in global markets, if, for example, such a large corporate in China is putting the world on notice that global supply will be depressed this year and next year, it also means that we expect global prices of iron ore on world markets to also be contracting. The mainland steel market in China sets the tone for conditions in the industry, not just in China but around the world, and the trends in demand, supply, pricing and exports carrying implications for everyone around the globe. The downbeat outlook ran positive signals from Asia's biggest economy as first quarter growth topped expectations. Steel prices rebounded and mills profitability improved. However, Boesteel is saying that is not going to last. However, if you look at their earnings, you can actually see their fears are reflected in numbers. While profit for 2018 hit record 21.6 billion yuan, which is $3.2 billion, with earnings of 5 billion yuan, net income in the first quarter fell to 2.73 billion yuan, down 46%. Gold. Now, gold dipped lower on Thursday due to an uptick in the stock markets. Investors sought direction again from the upcoming U.S. non-farm payroll. They got it. They didn't really like it. So as a result, gold actually suffered slightly, down 0.32%, and it's on track. However, gold is on track for its 7th week of gain. So don't cry for gold. It's actually still up over the last 7 weeks. Gold oil is also down. Oil down, weighed by smaller than expected drawdown on U.S. crude stockpiles and worries about the global economy. But anyway, that's it for In the Markets. We'll be back within the economy. And, of course, our main story, Zimbabwe Investment Authority. We're looking at seeing how do we incorporate everything into a one-stop shop. We're looking at Facebook outages. Did you know they were out on Wednesday? Well, we'll cover everything in the Mint. We'll be right back. On ZTN Network, Zimpapers TV Network on Facebook, and of course ztn.co.zw if you want to watch this show and any of our previous shows this week. So Monday, don't forget, Monday to Friday, every day, the Mint will be here to give you information on business. Now, as you know, we always like a bit of a laugh here on the Mint. And we found this funny story, actually. A guy called Mark Benioff, he formed a protest. He actually held a protest to actually steal a competitor's spotlight. He's one of the founders of a company called Salesforce. Salesforce is notorious for coming up with over-the-top gimmicks. And, of course, most famously, he orchestrated a fake protest at a Siebel Systems conference, complete with picket signs, chanting, and even a fake TV crew. This drummed up a lot of attention for Salesforce at his rival's expense. On another occasion, Benioff arranged to rent an airport's entire taxi fleet right before Siebel event was held nearby. He then had his employees pitch Salesforce on the way to the event, much to Siebel's displeasure. I don't know what you call that. Underhand marketing? Taxi marketing. Let's go with that. Now then, a more serious note. Now, of course, Zimbabwe has been going through fuel problems over the last couple of months, and of course it appears to have got worse. The question is what is going to be done about it? Why is fuel not getting to the market? And also, what are the implications of the lack of fuel on production, on businesses? Because don't forget, every minute that you're sitting in a fuel queue, you're not working, which means that production is down. And the number, we haven't even tried to calculate the number, but eventually over a period of time it will be billions of dollars. ZTN business reporter Taku Chambakwi actually got some comments from the Minister of Energy, Fortune Chassis. Listen to what the minister had to say.
Numerous malpractices. I'm going to continue to engage the industry. I was with them yesterday. Their proposals that they've made, which once we've agreed on certain positions, we'll be able to communicate. We are also looking at a rational distribution, not only of fuel by type, but rational distribution of service stations themselves. And we need to be sensitive to the economic activities that are happening in the country. When we are in the wheat growing season like now, and farmers need diesel, we must be able to discuss and agree on what is needed where. There is no point in having thousands of liters of diesel in an area where, for example, there is very little activity of an economic nature.
The main question is fuel getting to the market efficiently? We're talking here about supply management. We're talking here about Minister Chassis wants to start tracking fuel deliveries. The fuel sector has put in proposals. But the point is this. If we are buying more fuel than we require as a country, why is it not getting to us? Why is business still suffering? Why are there queues going around literally every petrol station in the country? This is important because it does put a dent in our production and, of course, our exports and, of course, any type of GDP growth that we want to look at. So sorting out the fuel and electricity are combined in terms if we want Zimbabwe to increase production. We're going to be looking at this story more in future episodes of The Mint, so don't go away on this one. We're going to keep an eye on it for you. Now then, did you know that last Wednesday the image outage was on Facebook, Instagram and WhatsApp? But it also gives us a behind-the-look scenes at how Facebook's artificial intelligence sees your photos. The outage was started on Wednesday and affected Facebook's 1.5 billion plus active daily users. It rendered Instagram all but unusable. It stopped social media images from loading and left in their place descriptions like image may contain table, plant, flower and outdoor, and image may contain tree, plant, sky. Okay, now, most of you may not have noticed this, but those Instagram users, or I know there's lots of you out there, you would have noticed it completely. The problem is this. Well, Facebook automatically scans all photos uploaded on the site. And, of course, it has to do it using artificial intelligence. No way humans could actually do all the billions of pictures that are uploaded every day. And that's used in the company's accessibility efforts to describe photos to people. Now, it's actually got a useful purpose, because the AI, for example, can describe photos to people who are blind or impaired. So it's a good process to have. However, the problem is this, is that Facebook uses machine learning to automatically interpret photos. But the question is, how much of your data is Facebook gathering? If it's still gathering photos if it's still gathering information when the photos are down, can you imagine the type of information that Facebook has? Coupled with that, with their launch of Libra soon in 2020, which already most of the world's bank regulators are coming out and saying, we have to look at this because all of a sudden you're creating a global currency. The question is, does Facebook have too much of your information, and is it using it effectively? I think your comments, please, to ztn.co.zw, and of course our Facebook page, Zim Papers TV Network. We want to hear from you. Anything on any of the stories we have, any comments, please let them come pouring in. I will look at them personally myself, and hopefully we may be able to get back to you on some of them. Now, Malaysia. Reports coming out of Malaysia say that the Malaysian economy expanded by 4.5% in Q1 of 2019, slightly above economists' forecast of 4.3%. It was at 4.5%. However, it expanded at a slower pace compared with the fourth quarter of 2018. Bank Negara Governor Datuk Nur Samisa Mohammed Yunus had on Thursday described the economic performance as commendable. GDP was sharply down. However, there was a recovery in the agricultural sector in particular. Crude palm oil benefited, of course, from increased exports. Continued expansion in private sector spending, as well as high net exports, are among the key economic growth drivers. However, except for the agricultural sector, all other sectors recorded either a slower growth or a wider contraction. Most sectors, in fact, contracted. Services sector grew by 6.4% in Q1 to 2019 compared to 6.5% the year earlier. Manufacturing grew by 4.2%, which is only 0.3% down. Now, the mining and quarrying sector contracted 2.1% as opposed to a decline of 0.6% in the first quarter of 2018. Now then, one very, very special lady, and I'll call her that openly, is Mildred Chassie. She is the Auditor and Comptroller General of Zimbabwe. Her audit reports are a must-read. She goes through all government ministries, all government departments, civil service. She goes to local authorities, and she highlights the issues that have come up and the issues that he needs to look at and to take umbrage on. Now, why we're mentioning this, of course, is corruption. And we call it corruption, maladministration, mismanagement, whatever you want to call it. The fact is, Auditor General's report needs to be taken seriously, and it's heartening to note that government has referred, so we understand through media reports, has referred the report to the Zimbabwe Anti-Corruption Commission for further review. It's about time we stop corruption in all our ministries, in all our government departments, and in all our cities. It's really critical. Anyway, have a look at some upsound that we have of Obert Gutu and Nick Mangwana. Listen to what they have to say about the Auditor General's report and corruption in general.
Government is doing all its best, all within its powers, to ensure that public funds are fully accounted for. I think we have a long way to go, especially in local authorities. As you may have noticed, only 3 out of 92 were accounted for. This is the new dispensation. We follow through things. We are in the midst of a reform. That means reforming the way we are doing things, reforming our bureaucracy, reforming our attitudes towards work and public funds, reform our whole disposition towards issues like transparency and accountability. I have to hasten to say, checking these reports, you would see most of them cover a longer period than just 1 year. They go 2013 in the case of Air Zimbabwe. It covers from even 2010 to 2014. It doesn't even cover the new dispensation. The new dispensation has to be judged by what it has done and what it's doing. We have got new ethos and new attitudes.
The World Bank estimates that corruption takes huge amounts, percentages of GDP, not just out of African countries, but around the world. So that is one thing. And of course, the President, Edie Mnangagwa's government, to our government, has stated that corruption is the #1 enemy and they're going to fight it. Here on the Mint, we will do everything to hopefully expose corruption and make sure that people are acted on. Corruption is not good for us as an economy, as a people, and it needs to be stopped immediately. Now then, Zimbabwe Investment and Development Agency. It's going to be a critical linchpin of Zimbabwe's open for business mantra. Now, there currently is a bill in Parliament, Zimbabwe Investment and Development Agency bill, which seeks to combine the Joint Ventures Unit, the Special Economic Zones, and Zimbabwe Investment Authority in one roof. It's going to make it easier for people, foreign direct investors, to come into Zimbabwe and find everything in one-stop shop. We caught up with some of the members of the One-Stop Shop Services Center, and we asked them various questions. We asked them, who's going to be in this? What's happening? What is the current situation? Is there an enabling environment? So we spoke to Alexio Chiunye. He's a Senior Executive Assistant to the Chairman, One-Stop Investment Center, Services Center. Listen to what he had to say about what is going to be in the One-Stop Shop.
Zimbabwe Investment and Development Agency. This is an agency that government is setting up to be in charge of all investments in the country. Will be the one-stop investment services center. This is where all investors now will come in, so that all the services are under one roof.
We were seconded from the various ministries, and we are 42. Basically, we are there to facilitate investment. We are actually currently conducting business. Investments are coming through, and we're making sure that we give them the best that we can. We have deans from the mining sector, we have energy, we have local government, so that we facilitate in terms of people wanting land, and we have people that came from public service.
Well, basically, investors are concerned about a number of things in the environment. For instance, they are concerned about infrastructure, about transport. They are even concerned about the availability of skilled human capital. They are also concerned, for instance, if they are to be engaged in projects that involve high technology ventures. They would want to ensure that even the institutions in the country provide facilities for innovation, for research and development, for inventions, so that that can support the high-tech projects that they would have in the country, including the provisions to be able to, for investors to take out their investment at any time when they want to, including remittances.
All right, we held those 3 interviews with Alexio Chiunye, Senior Executive Assistant to the Chairman, Tessa Chikaponya. She is the Dean. Now, what's interesting there is that she's seconded to the One-Stop Services Investment Center by the Ministry of Tourism. And in fact, every ministry has seconded deans to this project. The idea here is that if you walk in as an investor, you will have the police, ZIMRA, immigration, ministries all in one place, all in one shop when the bill gets passed. So when you walk in as an investor, everyone is there. And of course, the last interview was with Eric Hamaziripi. He's a research assistant. He's looking really more at the framework. What do investors want to see when they come into Zimbabwe? The legal and regulatory framework that makes ease of doing business. But the message I got from them to yesterday's interviews was Zimbabwe is open for business, and already the one-stop shop is effectively working. The bill, of course, will formalize it. Anyway, as you know, it's Friday, as I say, so we have a little bit of a laugh for you because, I don't know, have you seen lots of people walking around with cell phones and all of a sudden they either walk into lampposts or they walk into doors? Well, every owner strives for a clean space to welcome customers, and that routine cleaning chore is no different for Kim Wattrick and her team at Summit to Seoul. Wiping windows is one of the daily tasks at the boutique fitness and apparel store in Washington, D.C., and Wattrick's shop occupies a building from the early 1900s. During renovations, he decided to keep the glass door for its beauty and save on costs. So her staff have to ensure that glass remains spotless. Why? Well, because she said that when people leave the shop, we repeatedly have people run into the door. People are embarrassed. They tell us we do too good of a job cleaning the glass. The staff has held brainstorming sessions about this, ideas of how do they stop people walking into the door. They put signboards up, they put chalk marks up to tell people door in front. Nothing has worked. We have people run into the door daily. Wattrick said, we warn people we're on their way out. So I suppose the question is, watch where you're going. Well, that's it for the Mint on this Friday. I've enjoyed the week with you. And don't forget, we'll be back Monday morning. Every day of the week, the Mint will be with you in your house to make sure that your day starts with a business attitude. You've got to know about business and finance. You've got to have information if you want to do well in business. Anyway, that's it for this. I will see you on Monday morning. Remember, it's a weekend, so make sure you all look after each other. I'm Andy Hodges. See you on Monday. That's it for the Mint today.